Crude oil rallying today. It's still in a bear market, though, down 22% from its 52-week high. Joe, this is now on pace now for its fourth negative week. We're getting to the end of a period in which I know I keep bringing this up, but I can't help myself because you got a lot of exposure here. Yes. Bill's got a lot of exposure here as well. The end of the period in which you said was make it or break it for this space.
Yeah, no, and listen, I think there's a lot of equity investors have significant energy exposure. Yes, at the end of January, I think we'll be making some difficult decisions based on what the rules are dictating we need to be doing for these two factors, quality and momentum. But crude oil is in a really perilous position right now, and it needs a recovery. It needs a recovery fast. Now, you're moving into expiration. So as you move into expiration, that could be a potential inflection point. You're coming up on the OPEC Plus meeting at the end of the month. I would be surprised to see oil go below $70, but oil has a tendency to surprise everyone. So I'd love, and hopefully at some point we'll hear what Mark Fisher has to think about the spot price of oil itself. But we've got a nice bounce here today, up $2.50. And energy equities, thankfully, are responding up 2%. So I'm happy about that.
Bill Baruch.
Yes.
Cheniere, Marathon, Shell, SLB, Exxon. 15. So Joe's overweight the space.
Yeah.
You're like really overweight.
Very.
You're 15% of the book.
Yeah. Yeah. Well, and here's the thing. I mean, last year we were 15 to 20% and started taking it down in the early part of the year. We loaded back in May. I mean, look at a lot of this stuff has done really well since May. So this pullback, and to Joe's point, the expiration of the December contract. December, and when you get to futures, talk about futures trading, December is a big month, not only for crude oil, but a lot of the futures. So yesterday was the options expiration, and so a lot of options, especially institutions that are hedging and producers that are hedging, may go out to December contracts. When this thing was rolling off the board yesterday, it creates a sort of a pocket, and there was an air pocket. The market started breaking new lows. You already had a lot of institutions dumping exposure in oil after some of the war premium was coming out. We hit an air pocket. It's no surprise to see it bounce a bit here today. I think, though, that crude's going to continue to trade fairly well, and then I think we could chop around a bit and improve. The thing about it is, as Joe pointed to, the OPEC Plus meeting coming around the corner. You have Brent, basically the world staple for oil is below 80. OPEC Plus can really start to jawbone a little bit on that. On top of that, JP Morgan said earlier this week they wouldn't be surprised to see more production constraints from OPEC, so I think it's another. And then China, they're destocking. I think China is really going to ramp up imports first quarter this year. So I love the names that we have.
I think it would be interesting, too, if President Biden's administration begins to refill the SPR if prices did dip below 70 once again. And obviously, that gesture would be welcomed by the Saudis.
There has been a bit, as you pointed out, I think the other day, about decoupling between the the price of crude and the performance of energy stocks.
Yes, significant. So
lasting. In other words, your point was the energy sector wasn't down as much as crude was itself.
Well, yeah.
So what happens if that catches up?
Well, let's give the statistics. So far, month to date, you've got spot oil down a little more than 6%. Energy equities are down 50 basis points on the quarter. On the quarter, spot crude oil is down 17%, and the XLE is down 6%. I think, what does that speak towards? I think that speaks towards the condition, the strength of the balance sheet for a lot of these energy companies. I think it speaks towards a very strong capital allocation strategy, which we know a lot of them have and have been maintaining. So that, again, you say to yourself as someone who's overweight energy, that's one of the reasons why you want to stay there in the sector, because of the managerial discipline and the strong operational element that's being exhibited from these energy companies. And it's represented in a better performance relative to what spot price.
And these energy companies, these research companies are marking these companies to $50 to $60 crude oil. When's the last time we've seen $50 crude oil? I think that's a good thing, too.
We have unnatural supply constraints coupled with demand questions. That's why you're seeing this tentativeness, if you will, about the potential for oil to continue to be under pressure.